Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. Again, all of these videos are in addition to supplement the coming storm video, which we shot in November, that gives you a big picture of what's going on in our economy and what we're about to face in this economy. It's going to be pretty devastating if you're not prepared. It's going to be difficult no matter what. And so we want to let you know what's going on. These videos are really short updates on what's happening since we did that big picture video. So again, the link is real close to this video. I'd click on that and go check that out for free if you haven't. Today we're going to talk about just news or indications of a market crash. Some of this is a little old because I haven't put together a complete set of videos in a couple weeks, and so some of these things might have already been kind of changing. You've seen the market has been going down since these things started accumulating. But small caps and emerging markets were at record overvaluations compared to blue chips. I haven't gone back and investigated if that's fixed itself a little bit as the market has been down. But these are all signs that, hey, people are getting a little too aggressive and things are going to come back to earth a little bit. A few notes on China. They've been looking to add property taxes to investment properties. China has not had any property taxes. So a lot of Chinese, if they've been making money, what they like to do is they will just buy a property. Even if it sits vacant, they look at that as stored wealth because it hasn't really had a cost to it. As the Chinese add property taxes, well, that becomes not such a desirable storage of wealth, and that could really devastate that market. The Chinese are doing it because they're in a big bubble. They know their real estate market's been in a bubble, and they're just trying to slow that down so it doesn't really burst in a really painful way later. Another thing that they've been doing is increasing bank reserves. They've now increased bank reserves for the third time to slow down lending and just slow down their economy. And what we've seen from all this is their stock market has been down significantly. It was down 5% in one day earlier this week or last week, and it's been down. It peaked, I don't know, 6 months ago, and I think more. And so what's interesting is in 2008, China market crash led the world market crash. And China is sort of the big white hope in the whole economy. It's the thing doing the best that people are excited about. Okay, there's growth in the world. But we haven't seen that growth happening there. Things are slowing down there. They still have a lot of growth, but there's a bubble that needs to be popped. And so the market is down, and it might be the case that they're leading the world into another crash. Spain's unemployment, they actually leaked this, that it's up 20%, but then they pulled the information as soon as they put it out. So they didn't like that information going out, but that's massive unemployment. These things are going on around the world. So, again, why does it matter? We're all connected. We're connected with all these other economies. Our banks are so interconnected at this point. If things start crashing, the world starts crashing. Rosenberg had a couple interesting points. He thought that he said the stock market is 34% overvalued, and the fact that we had a 400-point rally the day after that big crash day was a bearish thing. The amount of money in money markets and bear funds is at a multi-year low. And an interesting thing about banking, as we see ratings agencies starting to downgrade people, what happens for banks when they hold AAA paper? They have to hold very little in reserves. The lower the rating of the bonds that they hold, the higher reserves they have to have. So as the bonds are being downgraded around the world, that makes banks have to keep higher reserves. If they do that, that means they have a lot less money to lend out, which is pretty devastating to the economy. So you can see, again, how there's a circular effect to all these things. So one thing causes another bad thing, causing another bad thing, which comes back to the first thing and makes that worse. And we're seeing that happen all over. April 30th, the FDIC has been closing banks at an amazing rate, and they're going to continue closing more and more. The banks closed on April 30th were the largest one-day losses in our banking system since IndyMac went down a couple of years ago. It's a huge day. I didn't see this past Friday's numbers, but before last week it was 68 banks closed already this year. And the last note on this video, the U.S. home foreclosures are up 45%. And again, banks are holding back. Banks realize if they foreclose everything they can foreclose, that destroys the value of the other properties that they have that still have some value. And so on one hand, they're holding back from foreclosing as much as they could. On the other hand, they're foreclosing record amounts. So it gives you an idea of where our real estate market stands and where our banking industry stands. And those are two huge keys to our economy. It's not a good sign for where our economy is going. Thanks for watching this video. Again, if you haven't seen the coming storm video, check out that link. It'll take you right to a page. You can sign up for the newsletter and you'll get that immediately for free. You'll also get an invitation to a product we put together. I think it's an amazing value. We've been spending weeks on that here, and it's going to be a neat thing that'll be offered to you if you're on that list. Thanks, and God bless you.